what we're going to do today is we're going to talk a little bit about 1031 exchange, some of the trends that are going on. But what I really want to focus on today is how you guys as real estate professionals can grow your business with a little bit of knowledge about 1031 exchange. So I'm going to go ahead and share my screen here. And we will also take questions as I think they're appropriate. So if you have an urgent question, maybe you can type it into the chat and I'll try to address it if I can figure it out. But otherwise, we can kind of open up towards the end of the presentation to really have kind of a more of a dialogue. But what we'll do right now is we'll just talk a little bit about what's going on in 1031 exchange. And there is a bit of misinformation right now with kind of some of the tax law changes as they relate to 1031 exchange. So what I want to do is kind of address some misconceptions about Biden's proposals regarding taxes and real estate in 1031 exchange. Before I do that, though, I do want to let you kind of have an overview of how the 1031 exchange market is going. And as you guys can imagine, the real estate market is bonkers right now. There's multiple offers, there's a lack of inventory, and buyers are, just really bidding up properties. So what we're seeing is record volume with 1031 exchanges. The industry itself is going bonkers. Escrow is busy. You guys are all probably busy, and the same is true for us. So we are definitely seeing a lot of 1031 exchanges. In fact, we've probably broken a record every month in 2021 in just the number of deals we are doing. So that's a good thing for us, and it's a good thing for you guys too, because 1031 exchange buyers and sellers are good clients to work with, and they're really driving volume in a lot of markets. One of the increased trends that we have definitely seen this year is there's always people who do 1031 exchange where they leave California. It's just that the California market is expensive. So a lot of people will take advantage of selling in California and buying in places like Texas or Idaho or Florida. And that has really increased in 2021. So we do have a lot of clients who are trading out of state always, but it has increased dramatically. And then the other thing that we're seeing is an increased interest in alternative investments. And what I mean by alternative investments is whenever you do an exchange, you have to buy real estate. But there is a product that is non-traditional real estate. It's called a DST, where you are allowed to buy into a slice of a big $50 million or $100 million building. And a lot of our exchange clients are looking into those because traditional real estate is just really hard to buy right now because of the lack of inventory and the competition. So that's what we're seeing in our market. And what we're seeing also is at the national level, there has been a lot of talk about proposed changes to the tax law, and a lot of people are really fearful about how that might affect 1031 exchange. So what I want to do right now is just separate a little bit of fact from fiction. So if you've been told or if you've heard that the 1031 exchange is slated to go away, that is just not correct, okay? Section 1031 has been on the books for a very long time, and Biden's proposal is not to eliminate 1031 exchange. However, his initial idea to raise revenue to help with his infrastructure plan was to do away with some of the loopholes. And his initial proposal was to limit the amount of gain that could be deferred with the 1031 exchange. And that limit was going to be $500,000 per taxpayer or $1 million per married couple, okay? The other thing that we hear a lot about is increased taxation from the capital gains perspective. And there's a lot of misinformation about that as well. What Biden was proposing was simply changing the capital gains tax rate so that there was no special capital gains tax rate. Instead, he was just going to tax capital gains at ordinary income rates. Now, that would mean a significant increase for people who are on the really high income levels. Okay, because right now, as you can see from my screen here, The current capital gains tax rates are either 15 or 20%, and that's depending on your income. So if you are going to change that and have it go to ordinary income tax rates, that could mean capital gains could be taxed as high as 39.6%. Now, what you see before you right now is just Biden's proposal, okay? A proposal is just that. That's just an idea of where things could go. What will likely happen based on current Congress support and current conversations at the congressional level is that there's probably going to be absolutely no change to the 1031 exchange rules. In fact, there was an amendment introduced to preserve 1031 exchanges in their current form, and there is strong support for that, and there is not a lot of support to change 1031. So if you or your clients are freaking out that 1031 exchange is going to go away, know this: it's probably not going to. It's probably not going to be changed at all. I've been doing this for 20 years, and every time there is a new president, whether they are Republican or Democrat, there is talk about changing the 1031, and it has never gotten done. So I don't expect this time to be any different. The other thing that's important to note is that we are likely not going to see capital gains tax rates increase to 39.6% or capital gains be taxed at ordinary income. Right now, most people are saying that we will see capital gains tax rates go up from their 20% to about 28%. So I think that's a likely outcome. And then I also think one of the things that you will see, regardless of what happens, is more investors doing 1031 exchanges. We know right now that capital gains tax rates are really low. They're probably going to go up. And whenever capital gains tax rates go up, there are simply just more 1031 exchanges that are done. So it's very good that you guys are joining this class, because as a real estate professional, if you can kind of get in with your investor clients right now and start talking to them about some of these changes and how they might affect their portfolio, you're going to be in a really good position to help them do their 1031 exchanges when it comes time for them to sell their real estate and conduct an exchange. So what I want to talk about for you guys is just how to do that, how to talk to your clients about 1031 exchange, how to grow your business with the 1031 exchange. And I want to give you the magic formula. So if you take a look at your computer right now, the magic formula for working with clients and growing your business in the 1031 exchange market is this. It's a four-fold or a four-step plan. Number one, you need to understand what a 1031 exchange is, right? We'll go over that. You need to understand why investors do 1031 exchanges, and you need to market solutions to your investor clients, okay? And then fourth and finally, you really need to build a top-notch team to help you do these exchanges. People like Candace and her escrow division, people like me who can really help you get through these type of transactions, okay? So how are you going to grow your business with 1031 exchanges? Well, the first thing you need to do is understand the 1031 exchange. All right, so let's talk about kind of 1031 exchange at the high level. So Section 1031 of the Internal Revenue Code has been called one of the single greatest wealth building tools available to investors. And it's been called that because it allows you to sell an investment or business use property and defer paying taxes. And right now, between our federal and our state taxes, your capital gain tax rate is going to be about 33%. Okay, so that's between our state and our federal. I know I showed you a slide earlier. It said 15 or 20%. That's only the federal tax. But when we add in the state of California, you're looking at a tax rate of about 33%. So for a lot of our clients in the Bay Area, that could be $200,000, $300,000. So if they're going to sell the real estate, if it's an investment property, they have two choices. Number one, they can sell it and just pay the big tax. Or number two, they can do the 1031 exchange, keep the tax money in their pocket and use it to go out and buy another investment property, right? With the 1031 exchange, you're exchanging from one property to another. And as long as you do that in a 1031 exchange, you get to keep all of your tax dollars in your pocket. You don't have to pay the government. All right. So that is a very powerful tool. It's a very powerful way to keep all of your money working for you. Now, if you're going to do a 1031 exchange, you need to know the rules. All right. So let's talk about those rules real quick. Rule number one, when you do an exchange, the properties involved in an exchange have to qualify. How does a property qualify for 1031 exchange? Well, it needs to be held for investment or business purposes. All right. So you have to be selling a rental or an investment property. Okay. We do not do 1031 exchanges on our primary residence. Okay. You just don't. Primary residences do not qualify for 1031. So if you are selling a property that someone lives in, don't call me up. We can't help you out. That's not a 1031 exchange. But if your client is selling a rental property, they've got a business property, they've got a big commercial property, that property will likely qualify for 1031 exchange. Now, there may be a situation where you are not sure if your client's property will qualify for 1031, and that's fine. Just pick up the phone and give me a call. All right, we'll go over the facts and circumstances of your client's particular situation, and we'll figure out if your client can do an exchange on the property. And I'll give you an example. Okay, there are some people who have Airbnb properties, right? They don't rent it out all the time, but they rent it out sometimes. Will that property qualify for 1031? I don't know. It depends. Okay, the big issue is how many days are they personally using that property. If it's very limited, or if they're not using the property at all for their personal use, it's very likely that the property will in fact qualify for 1031 exchange. All right. What we want to see is very limited personal use, and we want to see rental activity on the property. Okay. If they have that, then it's likely they will qualify for 1031 exchange. All right, so rule number one is you need to make sure that your property qualifies for 1031 exchange, and it is a true investment or business use property. Now, Denise says, what time frame is considered limited use? Okay, so if you are going to personally use the property, and I don't know why, but I usually can draw on the computer screen here. I don't see the tool to be able to do that. Okay, so I'm just not going to be able to do that. So when you are using a property, if you use it too much for your own personal use, it will be ineligible for 1031 exchange. Now, Denise wants to know, well, how much is too much? The rule is this: you can use the property either 14 days or 10% of the amount of time it was rented. All right, so that's the rule. 14 days of personal use in any year, or 10% of the amount of time it was rented can be used by you personally. If you exceed that personal use, you are going to be ineligible from doing a 1031 exchange. Now, how does the IRS know that you're using the property 15 days or 11% of the amount of time it was rented? Well, they probably don't unless you're keeping very good records, right? And the property managers are tracking all that stuff. So it's really hard for the government to know. But if they do find out that they've used that you have used the property too much, like I said, you're going to be ineligible from doing an exchange. So what you really want to do is kind of limit that personal use. But very good question, Denise. Okay. So rule number one is make sure your property is qualified. Rule number two, when you do a 1031 exchange, and this is important, if you don't want to pay taxes, you're going to have to make sure that you meet the tax deferral requirements. And the tax deferral requirements are this: number one, reinvest all of your cash. Number two, purchase property equal or greater in value. If you sell a building for $1 million, when you do an exchange, you're going to have some cash that comes out of the sale. That cash comes into the 1031 exchange account, and then you're going to use that as a down payment to buy another property worth $1 million or more. All right. You have to remember those two things: replace the value of what you sold and reinvest all of your cash. A lot of people think when you do a 1031 exchange that all you have to do is spend your profit, and that is not correct. Okay, a lot of people think when you do an exchange, if you have $250,000 of profit, all you have to do is spend that $250,000 of profit, and that is not correct. You have to replace the value of what is sold. So if you sell for $1 million, you want to go out and buy another property for $1 million or more using all of your cash as a down payment. Now, what that means is if you have debt on the property, that you're going to have to replace that debt, right? A lot of people think all they have to do is spend the cash. Nope, you've got to replace the cash and take on debt so you're buying enough real estate, okay? Third thing, when you do an exchange, you have a time frame. You have 180 days to get your exchange done, okay? Very important. And then fourth thing, you need to identify what you're thinking about buying on day 45. All right. So you guys know those time frames. 180 days total. Time frame starts the day you close escrow. 45 days to identify what you're thinking about buying. Now that's really important in today's market because we have a lack of inventory, right? And you have a lot of competition. So you're going to want to make sure that you're coaching your clients when you're doing an exchange to get out and start looking for replacement property as soon as possible, because those 45 days are going to go really quickly. So the sooner you start looking for suitable replacement property, the better. All right. So those are the four basic guidelines. We're not going to dig too deep into those. I just want you to have a basic understanding so that you can talk to your clients about kind of the basics. If they have more in-depth questions, we can always get together on a conference call and kind of go over the more in-depth questions. All right. But if you know these four basic guidelines, you're going to be in a good position to help your clients get through the 1031 exchange process. Now, in order to work with clients who are doing exchanges, I think it's really important to know, number one, why clients are doing transactions, right? You can't help a client do an exchange if you don't know why they might want to do one. And the biggest reason why clients are going to want to do an exchange is because they don't want to pay taxes, right? And we mentioned that if you are selling an investment property in California, about 1/3 or 33% of your profit, your gain, goes to pay taxes. So people just don't want to pay that tax bill. So that's why they're going to consider an exchange. So if you know a client who has owned a rental property and they've owned it for a very long time, the chances of them having a very big tax bill is pretty high, right? Because the property is appreciated quite a bit. So talk to them about the tax implications of their sale. And obviously you don't want to give them tax advice, but it's safe for you to tell your client that they will face about a 33% tax bill on their gain. And if they don't want to pay that, they should consider the 1031 exchange. Now, the second reason why people do exchanges is because they're looking to build wealth in real estate. And they want to go out and trade from a small building to a bigger one, right? They want to get out of a single family rental and get into a multifamily apartment building, or they want to go from one small property to a bunch of, want to go from one big property to a bunch of small properties to kind of have more properties under their management so that they can increase their cash flow. So they're going to look at the 1031 exchange so that they can keep their money in their pocket, use that to go out and leverage into bigger and better properties. So if you know that you have clients who are looking to build wealth through real estate, you need to talk to them about the 1031 exchange, because that is the fastest and the best way to build wealth. Now, thirdly, some of our clients are already very wealthy and they are looking to protect and preserve that wealth, and they're using the 1031 exchange to do it. All right, imagine if you have a client who owns $5 million worth of real estate in San Francisco. If there is an earthquake in San Francisco and their buildings fall to the ground, they're going to lose all of their wealth, right? So what a lot of our clients who are doing who are already very wealthy is they're using the 1031 exchange to diversify. So they're selling in places like San Francisco that could be, prone to earthquakes, or places that are prone to wildfires, and they're going into different markets. All right. Now, you may know people who might want to diversify their real estate portfolio. They might want to get out of your particular market and go into different areas so that they can diversify, right? You can diversify based on geography, go into different areas, or you can diversify based on asset class, where you get into different types of real estate. And diversification is important because it allows you to protect your wealth, right? It's the best way to protect and preserve your wealth. You don't want all of your eggs in one basket. You want to kind of spread out your wealth into different markets or different types of property, so that if there is a problem, you have limited exposure. All right. And then finally, a lot of our clients will own property for a very long time. And two things happen when you own property for a very long time. Number one, you get sick and tired of the property. And number two, you run out of depreciation. And those are both very good reasons to consider a 1031 exchange. If you have a client who's owned a property for 35 years and they're 75 years old, they may not want to manage it anymore. And it might be a good time for you to approach them and say, hey, listen, let's list your property for sale and get you into something that's a lot easier to manage. So you can show them with the 1031 exchange how they can exchange out of their really tough to manage property and get into something that's easier to manage. Maybe it's just a property that's closer to home, or maybe it's getting into a passive investment. Okay. And then also along the lines of kind of long-term ownership issues is when you've owned a property for 27 and a half years or longer, that property becomes fully depreciated. And when you have a fully depreciated property, your tax benefit of depreciation is gone. And a lot of CPAs will advise their clients to sell that property when it's fully depreciated and trade into a new property that's of larger value so they can get new depreciation write-offs. Okay, those are very good reasons to consider a 1031 exchange. And then finally, California has really tough rent control, and a lot of our investors are saying, hey, we don't want to be in a particular market because of how obnoxious or onerous the rent control laws are. So we don't want to be a landlord here anymore. We want to go into a different market that might have better, more favorable landlord protections. Okay, so the unfriendly legislation has prompted a lot of our clients who own investment property to do 1031 exchanges into different areas. All right. Now, I know Denise and Alice had a couple questions. I'm going to get to your questions towards the end, okay? But feel free, if you do have questions, to type them in, and if I can address them, I will do so while I'm talking. Okay, now the key for you guys is to take this information and grow your business. Do more deals because of what you're learning here today. Now, how do you do that? Well, you want to market solutions to your clients, to your investors, right? I know that a lot of you guys are really good at marketing yourself, but what about marketing a solution to your investor? Okay. And if you know your investor's problem and you can solve that problem, you're going to be in a position to be able to do good business with them. So let's talk about some of the ideas that I have for marketing and marketing solutions to clients. Okay. So the first thing you can do is you can go out and talk to Candace about who might have some of these problems, right? So people who are in a situation where they've owned a property for a very long time, they might be sick and tired of managing, or they might be out of depreciation. Okay. So if you do not know clients who are in that situation, Candace can put together a farm list for you where she can search the tax roll database and show you exactly how many people who have owned rental properties in your area for 25, 26, 27 years. Because those are people who might need to do an exchange because they're sick and tired of managing property, or they have run out of depreciation. All right. Candace can also show you people who own a lot of real estate in your particular area. And those are people who may need to diversify. right? If you own 5 or 10 or 15 properties in one little town and there's a problem or a fire in that town, you could be in trouble. So you might be inclined to sell 1 or 2 or 3 of those properties and get into a different geography, or you just can get into a different type of real estate, right? Imagine if you owned a bunch of office buildings in San Francisco right now. You'd probably be a little worried whether or not people are going to come back to your office, right? People are working from home. So if you have an office building right now, you're going to be in a position where that building could be a lot less valuable. So what a lot of people are doing is diversifying, getting into different types of properties so that if there are big potential problems down the road, their exposure is limited, right? Now, another good farm list is absentee owners, people who live in another state, but they own property in your backyard. Okay, those are great people to talk to about 1031 exchange because number one, are they familiar with California's rent control laws? Okay, do they understand the rent control issues in your town? I doubt it. Okay, if they live in Texas or Colorado or New York, they're probably not up to speed on California rent control issues, and they might not want to get up to speed. They may be more inclined to sell their property, do a 1031 exchange, and go buy something in their own town where they understand the local ordinances and issues. Okay. And then just that last list here, retired older people that own real estate. Again, they just might not want to manage property and it's a hassle for them. So that if you could show them how to exchange out of their tough to manage property and get into something that's easier to manage, you might get a new listing. All right. Now we have farm lists. And Candace can help you create them. We also have letters, sample letters that once you get your list of people, you can mail letters to them that talk about some of these issues. And Candace and I can provide those letters and Candace can provide those farm lists for you. All right. Now, when you do talk to the investors, I know that one of the best things that you can do is provide them a solution. All right. But first, you need to know what their problem is. Okay. And for a lot of people, their problem is that they have very expensive properties that are not cash flowing very well. Okay. Maybe they bought the property a long time ago and they have a lot of equity built up, and that equity is not really producing anything for them. They've got a rent controlled property. It's worth a lot of money. And if they sold that property and did a 1031 exchange into a different market, they can double or maybe triple their cash flow. Okay. Now, if you start talking to real estate investors about how they can double or triple their cash flow by doing a 1031 exchange with you, that is a very good conversation to have. And it's a conversation most investors are at least going to listen to. All right. So when you do your marketing, start talking to your clients about how they can increase cash flow and show them good examples of what they can trade into to increase their cash flow. All right. When you put a marketing a campaign together like this, it's going to lead to new listings. I guarantee you, because I've worked with clients, realtors who have done just that. All right. So that's one idea. Now, another idea, and I can't take credit for this idea. I actually had a real estate agent tell me that after they took my class about 1031 exchange, what they did was they went out and took a picture of the ugliest tenant occupied property in their neighborhood. And they mailed that picture to the owner and they said, hey, list this property with me and let's do a 1031 exchange into something that's much, much better and easier to manage and isn't falling apart. Okay, that's a great idea, right? Go around your neighborhood and look at the tenant occupied properties and see what condition they're in and mail a picture of the property to the owner and say, hey, you've got a property that's really in disrepair. There's a lot of deferred maintenance. It's a great time to sell. Let's do an exchange out of this property and get you into something that's better, a little bit newer, and has less problems. All right, so solve problems for your clients and you will get listings. Now, one of the greatest ideas that I've heard of that realtors are doing is they will actually print out a copy of the California rent control law and mail it to owners of rental properties that don't live in California, right? So if you've got a owner of a property in your neighborhood and it's a tenant occupied property, but the owner lives in Texas, like I mentioned, they might not know what California rent control law is all about. Send a copy of the California rent control law to them with your business card and say, hey, are you up to speed on this? Do you want to get up to speed on it? If not, let's list and sell this property and do an exchange into an area that you are more familiar with the rent control issues. Okay, those are some marketing ideas for you, but I do want to end with, you will not do a 1031 exchange with clients unless they know that you do 1031 exchanges. All right. So one of the things that you might want to do is on your business card, let people know that you do exchanges. Okay. Jerry took my 1031 exchange class many years ago. And right after the class, he went out and put 1031 exchange specialist on his business card. And he didn't know much about 1031 other than what we're talking about today, but he did have a secret weapon. Okay. And that secret weapon was my phone number. And as long as he had me on speed dial, he could get all of the answers to any of his clients' 1031 exchange questions right away. Okay. You guys have that secret weapon as well. I'm going to be on your team if you need 1031 exchange consultations, advice, answers to questions. You've got a team member here now that you can call that is willing and able to help you out at any time. Okay. So use some of the ideas today to go out and start talking to your existing clients who own rental property. Use some of the farming ideas to sit down with Candace and build a good farming list, and use our sample letters to go out and start getting new listings, because I guarantee you, if you do so, it will lead to new business. Now, the last thing you need to do is make sure you have your team in place that hopefully will be us for the 1031 and Candace for all of your title and escrow needs. And then lastly, I would suggest you also learn a little bit about what a DST is. We spoke a little bit about those at the beginning of the presentation. Essentially, what a DST is, it's an alternative to traditional real estate where you can buy into a slice of a very large $50 million or $100 million apartment building or something like that. Okay. And Denise said, well, what's the estimated return on a DST and what's the minimum time to invest? That differs with every single company. Okay, different companies offer these DSTs and they have different investment horizons and hold periods, and they have different investment minimums. But typically what you're going to see, Denise, is a very large apartment building being offered as a DST product. Okay, it could be a $50 million apartment building in Texas. And the minimums are typically $100,000, and they return anywhere between 4 to 6%. And a lot of our clients like these because they are actively managed by a professional real estate company, and the investor who gets into them is completely hands-free. So it's a passive it's a passive investment for your client. It's professionally managed by the real estate company that put the deal together. All right. I can introduce you to people who sell those. I can give you some information, more information about those if you want. Okay. But I would encourage you to put a team together so that when you do talk to clients about 1031, you've got all the people in place so that if your clients have questions or need more information. Okay. Now, I do have a couple of questions here from Denise and Alice, so let me go over those and then we'll go ahead and open it up to the rest of the group. Denise asked me earlier, what time frame? Okay, I answered that one. Alice answered, can a foreign investor do a 1031 exchange if they have rental property? And the answer to that is absolutely. Okay, but they do need to apply for what's called a withholding certificate, and they have to have a taxpayer ID number to do that. So if you have a foreigner who wants to do a 1031 exchange, before you list their property, have them talk to their CPA to make sure that they have a tax identification number and that they apply for the withholding certificate so that they are exempt from the FERPTA 15% withholding. If you do have a foreigner who wants to do an exchange, email me and I will send you a document that outlines kind of what they need to do. All right. Can a foreigner do an exchange? Absolutely. But a couple steps that need to be taken before listing the property so that they don't have any issues with FERPTA. And I think that is it. So let's go ahead and open it up to the group. If you do have questions or want to talk a little bit more in detail about one particular thing, go ahead and unmute yourself and we'll just go ahead and have a normal conversation now instead of me just talking at you.
Leonard, I have a question. This is Candace. What about people that have a home but have an ADU that they rent out, or they rent out a guest house, or they have a rental on their own property? Do they qualify for any type of exchange benefits if they decide to sell that home?
Yeah, great question. So if you have a rental component on your primary residence, that component or percentage of the property that is being rented will absolutely qualify. So if you have an ADU in your backyard, or if you rent out if you rent out a couple rooms to college kids, whatever, absolutely you can do an exchange on that portion. Now, what is that portion? I don't know. Your CPA will have determined how much of the property he or she is allocating as an investment on your tax returns. And then we will use that percentage number to allocate for the 1031 exchange. Okay, so for example, if you're selling $1 million property and the CPA says, okay, we've allocated 20% of the property as an investment because of the ADU in the back, then we will do an exchange on 20% of the $1 million sale, or 200,000. Okay, but that's a great question, Candace. We have people who do that all the time.
Anybody else have any questions for Leonard? Anything about any other questions regarding foreigners? You know, in my experience, we have not just in 1031 exchange, but even if they want to sell a home here, they still need that tax ID number. And sometimes we're at the end of a transaction and we're scurrying to get that number. So thank you for that, Leonard.
Yeah, absolutely.
Is there anybody else that can think of anything else they would like to ask? Okay, so Denise and I are happy to help you with any of the farming ideas that Leonard suggested here. Fantastic. Leonard, you do such a great job, because this is kind of a dry subject and a lot of times people fall asleep. But you are great at it. Thank you. So yeah, I think we've known each other more than 20 years, but that's okay.
Yeah, it's been a long time.
So we work at Lawyers Title in Saratoga. We cover Santa Clara County, so feel free to reach out to us. And we have always used asset exchange. I've worked for 3 different title companies over the last 35 years. And this group, Adam, Leonard, they do a fantastic job. And do you have people in your company that speak other languages besides English?
Yeah, we do. So we have Spanish speakers as well as Cantonese and Mandarin. So it works out well if you need it, and we definitely have it. So not a problem on Spanish, Mandarin, or Cantonese.
Okay. Anything else? Okay,
All
Leonard,
right.
Thank you for your time.
Thank you so much.
No problem. Thanks, guys. I'll go ahead and
Thank you,
sign off.
Leonard. We'll be talking to you soon. Thank you,
Take care.
everybody, for joining. It was a pleasure. Bye-bye.
Thank you.